My name is Eric Nelson, and I'm with Silicon Valley Capital Funding in California. I'm a mortgage broker in the state of California, and I'm here today to talk about how to get your credit scores much improved or to create your credit if needed. I often hear questions from clients who say, I've been through a divorce or I had a health issue, or I lost a job, COVID hit last year, my income went way down, and so forth. Something substantial and significant happened where you were no longer able to make your payments on time. And their first question is, how do I get my credit repaired? Can I clean it up? And can I do it without paying some incredibly high fees? The answer is you can actually clean up your credit on your own without any fees. Now, here's the summation of what you could do. So you can go to wherever you bank, and you sit down with your banker, let's say it's Wells Fargo, and you tell them you would like to set up a secured account. It's very simple. You give them $1,000, for example, and they'll literally give you a credit card with a credit limit of $1,000. If you start making payments and charges on that account, it works like a totally normal credit card. If you don't pay the credit card back on time, they take the $1,000. So you're going to be highly motivated to make sure that you keep the payments on time. You don't want to lose your money. But if you make your payments on time for the next 12 months or 24, some do it with 12 and some do it with 24. And at the end of 12 months, they give you the $1,000 back. So making the payments on time gives you a double win. You get your money back, and you'll get 12 months of credit rating showing that you've been making the payments on a credit card on time for the last 12 months. I find this to be a really helpful technique for someone who's been through health issues or has been through a divorce or some sort of financial distress, lost a job, drop in income, and so forth. This is also something that can be done for a young child. If you're trying to help your college-aged kid begin to get credit established for themselves, the secured credit card is a great idea. And again, I caution you, the one twist of all this is, of course, the payments need to be made on time. And if you're going to carry a balance, the interest rate on these cards is high. It's usually somewhere to 20 to 25%. So my recommendation is use it minimally, buy a set of tires, get gas each month, maybe even your groceries or whatever, but that's it. At the end of the month, pay the thing off and just keep being rigorous about paying it on time. And at the end of the 12 months, the banker will go back and reanalyze the account and see if you're qualified to receive all your money back. The next you have as an option is something called an authorized user. So if you are about to get married, for example, or if you're trying to help your child get his or her credit started, you can add your child onto your credit card. So if you've made your payments on time on the credit card, the child will immediately begin to receive credit as if you are making the payments for them. Now, they'll get a card. So you'll want to make sure that you manage this carefully. This is not permission for your child to go crazy with credit. It is to have them on the account together with you. You'll need to make some sort of agreement. If they have any charges, they pay for whatever they charge. And you monitor the bill every month to make sure that everything's being paid on time. That's usually the lowest interest rate to go because, of course, your interest rates are probably going to be much lower than somebody who has no credit or bad credit. The next item is buying a car. If you go out and buy a car and finance it, you can, in a very short amount of time, begin to build your credit file. So if a car is financed for $15,000 or $20,000, which is pretty easy to do these days, most cars are at least in that category, then you're going to see a nice large chunk of payment show up on your credit immediately as being paid on time. At the end of 12 months, the credit score should jump quite a bit because you would now have a history of paying on time. Another caution here. That is typically interest rates on car loans, if your credit's bad or zero credit, is higher. So the payment's higher, the interest rate is higher. So I'm not a big fan if you keep in that loan for 5 years or 4. I would recommend a 2 or 3 year term, paid off in the shorter amount of time, pay extra if you can each month. All of those things will really help the credit score and keep you from paying too much interest. The last thing here is you can also add your cell phone bill to your credit report. Sound crazy? It's true. All three, Experian, TransUnion, and Equifax, will allow you to take your credit card or your cell phone bill, whether that's Verizon or AT&T or Sprint, wherever you have that, and they will allow you to link to your cell phone. And if you're paying, say, $200 a month or $300 a month on your cell phone bill, that begins to show immediately on your credit report. And it will show as if you're paying $200 a month on time. It's a really big advantage, and it's another great way to improve your credit score. There are many other things that can be done. Please contact me here if you have any questions. At the end of this video will be my contact info. Be very happy to help you with that and sort things out. My name is Eric Nelson. I'm with Silicon Valley Capital Funding. I appreciate it, and thank you so much for watching.